Welcome to the October 2022 Las Vegas Real Estate Report. My name is Jan O'Brien, and along with my co-team leader, Cosmo Morabbi, we are your local area experts covering all areas of the Valley. Make sure you reach out to whoever sent you this video. We're here to support you with all your Las Vegas Valley and area real estate needs. This is what we're going to cover today. As always, the Las Vegas real estate market update for the statistics for single-family homes primarily in September of 2022. We are going to compare the four areas of the Valley as we always do each month. Take a look at what are we expecting for the remainder of 2022 and into 2023, and talk about interest rates and what's impacting them and what's going to happen with interest rates and prices overall. All right, so let's look at the Las Vegas area September stats. This is single family. I'm focusing on single family homes for the month of September 2022, and we stayed flat 2 months in a row, August now and September. The median sales price was $450,000. That is still up 10.7% year over year for September. Now, what's interesting and what I want to point out is, and I have a couple slides this month to show you to put things into perspective regarding where we started at the beginning of the year at 435, where we are now at 450, and how the deceleration of home price appreciation is really what we've been seeing. We're not depreciating. Talked about this last month. We are just decelerating how much we're appreciating. As you can see in the beginning of the year, year over year prices, 26%, holding steady all the way through May, where we hit the height of our market historically. 482,000 continues to be the historic high for median sales price in the Las Vegas MLS area. Then we dropped down in June to 21.5, 14.8, 11.1 year over year appreciation, now 10.7 September. What's the rest of the story here? Well, more homes are on the market. Supply and demand. You're going to hear me continue to talk about supply and demand. In the heat of the crazy market in the last couple of years, we had crazy low supply. Even moving into January of the beginning of this year, there were only 1,821 homes available for sale at the end of January, whereas the end of last month, there were 8,121 homes available at the end of September. That has steadily increased all year. And demand has slowed down. We have way less sales than we've had year over year. I'll hit those numbers in just a moment here. All right, here is that comparison of the four areas we cover each month. So 450 is the median for all of the Valley, all of the Las Vegas Realtors MLS area that's covered. So it's all the outlying areas as well. And that compares to Summerlin at 619,000 median. That's up 11.5. Remember, 10.7 for the whole Valley year over year. Inspirada continues to be strong, showing 23% year over year increase in that median sales price at $682,500. The Silverado Ranch, we report this whole sort of triangular area here in the southeast. That's up 11.9% year over year with a median sales price that's under the whole Valley at $442,000. And then out in Pahrump, that is about 8.2% year over year with a median sales price of $380,000. Short sales and foreclosures. And by the way, let me back up. One here, I wanted to just point out 25.8% cash. That continues to trickle down just a little bit. We were up closer to 30% in the beginning of the year, 25.8%, and that brings me back to foreclosures. Short sales and foreclosures continue to be a very, very minor part of the market. 0.1% of all sales in September were short sales or foreclosures. And the number one reason and why I'm showing this particular chart nationally is equity. People still have equity, even with the prices making an adjustment from a high of 482 now down to 450 for 2 months in a row. For the most part, people still have equity. We'll have to come a long way down in sales, in average median sales prices rather, and have other things happen like a major job loss, which continues to be strong right now. Yes, we're dealing with inflation. potential recession. Some people say we're in a recession. It's pending. The Fed's doing what it can to increase, to decrease inflation, which is definitely slowing the housing market. And as it's increased the mortgage rates, more on that in a moment. So don't see a lot of short sales and foreclosures coming anytime soon. We'll continue to watch that every month. So again, another way to put that chart in perspective, just to see when you talk about the sales are down, or median sales price is down to 450. Okay, it's still up over the beginning of the year, and it's still up 10%, 10.7% year over year. We've just come down and we're making this adjustment, this price adjustment from the high of 482. This is a great chart to kind of show it in perspective since 2017. So here were the median sales prices in 2017, under 250. And here is this appreciation, kind of a nice, normal, steady growth. And then boom, we get into the pandemic and we have this couple years of this crazy low, seriously low interest rates. And that is the reality of why there's not as many homes on the market right now. Quite a few sellers are not putting their home on the market, because why would they if they've got crazy less than 3% interest rates that we're not going to see anytime soon, right? People have either refied or they got their loan when they purchased their homes in the last couple of years. They had great interest rates. And so now we look at really since May, this is right around May, June, that we've seen this massive increase to where the sales prices continue to peak up here. In May, that was the height, 482. And now we're making this adjustment down, and that little flat line is showing the last 2 months. But it's a great perspective to see where we've come. And so when I say people have equity, it depends on when you purchase the house. So if you purchased your house in here, and you, just again, we're comparing median sales prices, and you need to go sell now, there's still quite a bit of equity if you haven't taken the money out, done any cash out refis and so on. So mortgage rates, that brings me to mortgage rates. And yes, we have had rates since the May timeframe when the Fed started to really making these, they've made adjustments all year, but rates started to really float up over 6 and back around 5, 6 to 6.7. We've hit 7.14 without points over the last several weeks. You can see this steep increase. And here is a quote from economists with First American, which really puts it into perspective. While mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increases in rates is likely behind us. Nationally, while month-over-month house prices may decline, annual house prices declines are not expected, given the ongoing supply and demand imbalances and continued strength in the labor market. Okay, so yes, interest rates are going to be with us here for a while until we get this inflation under control. And this brings me to the national housing experts. Where do they see 2023 forecasted prices? Now, there have been major adjustments. If you go back and look at any of the previous reports, most of it was not for 23, though. It was saying where are we going to end the year in 2022, and a lot of that has been saying where we're at right now, about 10%. We're going to have to take a look at that as we get closer to the end of the year. Will it be below 10% here in Las Vegas? I think it may be. I don't think it's going to go up for sure. But all of the forecasters, with the exception of Ivy Zelman, are projecting a modest appreciation, an average of 1.5%, even if you take in this minus 4%. Now, interestingly enough, the Zelman team here has projected that we would see depreciation in 2020, which we haven't seen yet. So this is the most pessimistic of all of the reports, with most saying right around 1 to 2% appreciation, not depreciation in 2023. That's just major correction. So what are we dealing with? And this is in reality what we're seeing here in Las Vegas as well. Nationally, showings are down, right? More listings on the market, more active listings. It's not so much more listings, though. It's not an incredible amount of listing inventory. It's just less people purchasing homes. So the pending contracts and the sales are down, allowing more listings to stay on the market, which is great. If you're a buyer, there's definitely more to choose from. Showings are down. So the reality is, it's working. What the Fed's doing to curtail demand and tame inflation has really been impacting. It's slowing down things in the housing market. And this is what we're going to continue to see here. But let me bring it back to Las Vegas realtors and show and kind of end on these last two slides. So here is from January 1st of 2021. This is the graph month over month. These are all monthly data points showing pending sales. And I just want to be able to show you that, starting right in a couple months into, here's a little bit of a peak in 2022 with pending sales, which is excluding, actually, this is just all pending sales for single family homes. But look at this drop that we've had since about February, March of this year. Okay, we had a little bit of a dip up again. And then here we sit in September, which is 39.5% down compared to September of 2021. All right, that's the pending sales. That really just shows the reality of how there's just less demand, right? Bottom line, less demand. And that is obviously impacting the available inventory. So we are up 134.5%, excluding offers, for September. And this simply means how many homes were on the market available for sale on September 30th compared to September 30th of 2021, up 134.5% year over year. And here's where you can see, here's 2021, and we've come down here into 2022, and boom, here is where this available inventory has increased. But however, why I'm showing you this chart, because this goes back all the way to 2012 when we were coming on the other side of the recession, and we were in the major foreclosure or distressed property market here in like 2010, 2011, 2012, right in that area. This is close to 16,000 plus, actually almost 17,000 available homes on the market during that time frame. It's the total opposite of what it was when we had the Great Recession. And just to put it into perspective, here's where we are sitting today at the end of September. All right, that is the report for the month of September. The bottom line is, if you are a seller and you think the prices are going to come down, yes, the interest rates are high, but if you need to sell and you think the sales prices are going to come down, we think they're going to make some continued adjustments. This might be the time to sell. Reach out to us, one of our sales associates on our team, to help you talk that through and make the best decision for yourself. If you're a buyer and you're wanting to buy, yes, I know that the interest rates are keeping many people on the sidelines, but there's definitely some things to take a look at. We're looking at everything from assumable VA and FHA loans. You can check out a lot of the information that we have on our TikTok channel at Living Las Vegas if you are on TikTok. And if you are considering buying, there are other ways to potentially get your closing costs covered, maybe even get the interest rate buy down by negotiating with sellers who need to get their homes sold. So until next time, you can follow us on YouTube, TikTok, Instagram. We'll see you in November for the October report.